If you had invested 1 million Kenya shillings in Mansa X special fund 6 years ago, then last year, 2024 December, your net income would have been 1.8 million Kenya shillings. So in today's video, I'm gonna be dissecting through the difference between Mansa X special fund and also OC special fund. So consider watching till the end because I'm gonna share with you all the details that you need to know about these special funds so that you can decide whether to invest in this type of funds or not. I'll also go through the difference between these two funds and why I may consider it better than doing forex trading. So without further ado, let me share with you my screen and let's go through all the information. As you know, Robert Kiyosaki said, never invest in something you don't understand. And in this video, you're gonna understand what Mansa X special fund is all about and what OC special fund is all about. And we'll start with Mansa X special fund. So this fund is by Standard Investment Bank and it's regulated by the Capital Market Authorities. It was launched in January 2019. That's why I showed you that if you had invested 1 million Kenya shilling 6 years ago, how much would you have made? So what is Mansa X special fund about? So these are funds that specialize in multi-asset, both short-term and long-term investment in stocks, forex, commodities, futures with leverage. So it's just like forex. When you want to trade forex, you need a broker in order to give you leverage. So let's say you want to trade something and you have 500 US dollars. A broker can provide you a leverage of 1 to 200, which means you'll be able to trade 200 times 500 is around 100k account. So instead of trading $500, you have the capacity to trade up to 100,000 account. So Mansa X special fund also has leverage, and the minimum investment in this fund is 250,000 Kenya shillings for the Kenya shilling fund, while top up, that is the amount of money you can top up each and every time, is 100,000 Kenya shillings. Same case to the US dollar fund. The minimum investment is 2,500 US dollars and the top up is 1,000 US dollars. Also, funds usually have management fees and also performance fee. So management fees is what they charge to manage your investment, and performance fees is charged when the investment goes beyond a certain threshold in terms of return. You don't have to worry about this because I'm gonna do an example illustrating how this management and performance fees is being calculated based on your investment. And the net investment per annum has been averaging 17.7% since 2019. And in the fourth quarter in 2024, Mansa X special fund net return was 19.5. Let's now look at OC special fund before I now illustrate to you through an example of how we arrive at the net return of this special fund. So OC is run by Faida Investment Bank, which is also regulated by the Capital Market Authority, and it was launched on February 2024. So it also deals with multi-assets investment strategy where they invest in stock, bonds, forex, commodities, ETFs, derivatives, and it also have leverage. The minimum investment for this is 500,000 and top up is 50,000. So management fee for this is 6% per annum charged daily. I'm gonna explain to you how that is calculated, and the performance fee is 10% of returns above 20% per annum target. So if you get a return of 21, 22 and above, then they will charge the performance fee. Let me explain to you also about the Mansa X because I did not explain about the management fee. For Mansa X special fund, the management fee is 5% per annum and the performance fee is 10% on returns above, 25% per annum for the Kenya Shillings Fund and 15% for the USD Fund. Now let's see the OX special net return. So for OX special, the return for 2024 was 29.4, and for the first quarter in 2025 it was 4.66, and when annualized it is 18.6. Now let me now illustrate to you how the fees affect your investment. So let's say you had invested 1 million Kenya shilling in your fund for 1 year. So Mansa X, for example, let's say the return for this in the Mansa X fund is 20%, meaning that you are able to make 200,000 from your investment. So management fee is 5% of your investment. So 5% of 1 million is 50,000. So you will deduct that from the total investment plus the return, which is 1.2, which is 1.2 million Kenya shillings minus 50,000, which comes to 1.1 million 50,000. Now let's go into performance fee. So for Mansa X, for you to be charged performance fee, then your return must be above 25%. But in this, you got 20% return. So the performance fee will be 0 because it did not beat the 25%. So your net return will be 15% because it is 20. That is the gross return minus the management fee alone. So you will go home with an extra 150,000. Let's now see what happens if the return in investment goes beyond 25%. For example, 30. 30% means that you are able to beat the 25% return. So 30 minus 25% is 5%. So we'll calculate 5% of your investment, which is 50,000. So in that 50,000, you will be charged 10% performance fee, which is 5,000 Kenya shillings. So the net return, if you add a return of 30%, that is the gross, you will minus the management fee and also the performance fee. So 10% of 5% is actually 0.5. So the net return will be 24.5. So meaning that if you multiply that by your return, then you will go home with an extra 245,000 Kenya shillings. Now let's see the same illustration in OC fund. So let's say you earn 25% gross return and you had invested 1 million. So meaning that your return will be 250. So management fee is based on your investment. So it will be 60,000. So 1.2 million 50,000 minus 60 is 1.19 million. So performance fee. So performance fees in OC special fund is charged when your investment goes beyond 20%. But for Mansa X, it's charged when your investment goes beyond 25%. So you can see the difference here. So since your investment had a gross return of 25%, which is above 20% target, then the extra 5% is then charged performance fee. So 10% of that 5% is 5,000. So your net return will be now 25% minus 6% and minus 0.5, which comes to 18.5. So you will go home with 1.185 million Kenya shillings. So always understand about the performance fee. It's only charged when the gross return of your investment goes beyond the threshold set by either of this fund. I hope now you understand that. Now let's have a comparison between the two. For Mansa X, you can see the management fee is 5% per annum, while for Ox Special Fund, it's 6% per annum. So Ox Special Fund is kind of expensive in terms of management fee. Also in performance fees, for Mansa X, you can see they charge 10% for gross return that goes beyond 15% if you invested in the US dollars fund, and beyond 25% if you invested in the Kenya shilling fund. And for Ox Special Fund, the performance fee is charged when the gross return of your investment is above 20%. So you can see that Mansa X here is a little bit better compared to Ox Special Fund in terms of performance fee and also the management fee. Let's now see the net return of these two funds. So for Mansa X, it has been between 15 to 20% net return, while Ox Special Fund is 12 to 18. So for both Mansa X and Ox Special Fund, then you need to log in your investment for 6 months. You cannot withdraw before 6 months is over. The minimum investment for Mansa X is 250,000 Kenya shillings with top-ups of 100,000, while Ox Special Fund is 500,000 Kenya shillings, and both over leverage. Now, why will you choose investing in this special fund instead of forex? So, forex require you to be skilled, and if you are a beginner, you are likely to lose money. But with this special fund, these are experienced investors who know how to analyze the market both technically and also fundamentally. So if you are afraid of losing your money in forex, you can put some of your money in this special fund, while the rest of the money you can learn with it forex. So it's all about diversification. So with this, you will be able to invest in many assets, stock, bonds, forex, not just currency like in forex. So there is diversification. Another thing is professional management. Expert manage risk and trade on your behalf. So these are people who are experienced. Instead of spending much time learning how to trade forex, then this is an alternative. Regulated and transparent. Both of these special funds are regulated by Capital Market Authority, and they are audited, held by custodians. For example, we have the custodian of Mansa X being I&M Bank, and also you will have a smooth ride with these. Long, short strategies help control downside risk versus pure forex volatility. So when it comes to forex, you really deal with a lot of things there, including psychology and how to manage risks. But with this, all your investment is under management of experienced people. So also we have passive style. You don't need to watch charts 24/7 like forex trading. So that is the advantage of this compared to forex. And this is my final advice now. The cost of investing in these special funds really matters. For example, if you invest in Mansa X, then the management fee is 5%, while for Ox Special, it's 6%. So always consider that. And also, if performance doesn't beat the hurdle, you may only see gross minus management fee. So also consider the performance fee being charged. For example, in Mansa X, if you go beyond a threshold of 15% in the USD fund, then you will be charged performance, and 25% in the Kenya shilling fund. But for Ox Special Fund, it is 20%. Now, also leverage. With leverage, you are able to magnify your returns and also losses. So when you get into a trade with leverage, there is a possibility of making more than what you invested because you have leverage. It's like a loan you are given to trade a bigger account. Same case to losses. Your losses are magnified. So also consider that. Also, you should consider how long you want to invest your money. So for example, if you want mid-term investment, these special funds are recommended. Let's now go through the registration process of this special fund. For example, Mansa X, you need to contact them via email and you need to provide, of course, your details, name, ID, passport, KRA PIN, and you scan all those documents and they will send you a document to sign and then return it via email, or you can always return to the custodian bank, that is I&M, or even the Faida Investment Bank, for them to verify your details. After that, the next thing is to bank your amount, the minimum investment, and after approval, then your investment begin. Same case to Ox Special Fund. You do all the process through email, or you can go there physically to their offices. And that's all I had for today. Hope you have learned something about special fund investment and why you should consider it compared to forex trading. And this video is only for educational purpose. Don't take this as a financial advice. It's just to overuse some information that will help you make a decision when it comes to investment between this special fund. And consider subscribing, like this video and share it with your friends so that they can also learn about these special funds. See you in the next video.